How we doing, guys? DG Trading 101 here. Got another audio blog for you today. And this is one that I just recently wrote titled The Danger Zone. So, as you guys are probably aware by now, I have a very strong affinity to the psychological side of trading, and I think it's far more important than anything else. And I've hit most areas of trader psychology in the old audio blogs and old posts on my blog. I've covered most of it, at least that I think is important. But there's one in particular that I want to go over today, one aspect of it that I've come to realize is more important than them all. And I'm going to refer to it as the danger zone. And there are multiple levels to this puzzle on both a macro and micro scale in terms of intraday and bigger picture timeframes. And I'll map that out for you in a minute and then talk about why they're so important. So the danger zone is a foe that you're going to meet time and time again on a daily basis in your trading, so you need to be familiar with it. It's the critical point in any particular trade or period of time in your trading where a buildup of emotions and stress are going to tempt you to give into very irrational or unjustified action in an effort to alleviate that frustration. Right? We all know this devil. We've met him many times. You know, traders are typically and notoriously impulsive individuals. So when faced with a tough decision, when our minds are in the danger zone, we usually make the wrong move. When we say, oh, just a few more ticks, maybe it'll reverse, just a few more minutes, what's one more ad, things of that nature. And we've all been there more times than we care to count. So what are we going to do about it, right? I have a favorite saying that I often use and I think remains probably the most absolute truth in all of trading. And I say that 99% of trading success is just learning how to stay out of trouble. And I truly mean that. I really think that is the mecca and the problem for everyone is a lot of us are half decent traders, as far as seeing setups goes and having a fair amount of winning trades. It's not necessarily it's not that we can't make money in the markets. Most of us run into the issue in keeping the money. We aren't able to keep the money in the markets, right? Because we get into trouble and we do way more damage than we should. So, 99% of trading success is just learning how to stay out of trouble. Let that sink in, and that really needs to be your golden rule. And what that basically boils down to is that you need to become intimately familiar with the danger zone and a master at controlling it. And today I want to go over a few specific examples of identifying what the danger zone is and why we fall prey to it so often. So when we get put in a tight spot in a trade, this is where all of the issues start. We go completely brain dead, for lack of a better description, most of the time, right? We black out in terms of our ability to think rationally and logically. And this is the essence of the danger zone. That's when this point hits, is when we run into this time where we need to make a smart decision here. We had a plan initially. The plan's kind of crumbling on us now. And what do we do about it? Do we follow through and stop the trade? Or do we cling on to hope and in an effort to try and not eat the loss, just give it another minute and another minute. And then before you know it, you're dead. So we'll call this the, I'm already fucked. What's a little more fuckery at this point, right? Maybe I'll get a miracle bailout and it'll work mode. And this has to stop. Has to stop. This is an extreme delusion of reality. An absolute delusion of reality. And one of the most dangerous possible thoughts you could ever have. And if you find yourself in this mode, you absolutely have to act. I don't care how painful or how difficult it is, you have to stop the trade. It's not an option. You have to live to fight another day, right? That needs to be your complete focus when you're growing a trading account. And trading is all about making the difficult decisions, right? We trade volatility, and there are some known characteristics of trading volatile names. For the most part, the best time to short a volatile stock is when it's going absolutely nuts and nobody wants to touch it with a 10-foot pole, right? And likewise, the best time to buy a momentum stock is when it's getting absolutely destroyed and nobody wants to touch it with a 10-foot pole. And the same concept applies on the emotional side and with yourself. If you get caught in a trade and you're sitting there squirming in your chair thinking, holy shit, this is awful. I can't stop out right now. That'd be terrible. I don't want to eat this loss. That's the time that you must stop out. You have to. Take your 10-foot pole out, hit yourself over the head with it to knock the stupid out of you, and do the right thing. If you can train yourself to make the tough calls, you're going to like the ensuing results in your trading progress that follows. Okay? Capital preservation is paramount to all else in the game of trading, and you have to get on board with that, or you won't be around much longer. One of my good friends and trading partners said it best. He said, stopping out where I think I should and being wrong is a lot easier to live with than not stopping out where I think I should and being right. So think about that for a minute. Stopping out where I think I should and being wrong is a lot easier to live with than not stopping out where I think I should and being right. As in, oh, I know I should stop here, and then you don't, and then it rips another dollar on you, and then you're like, oh, great. That moment, right? And it's really all that matters. That's what I'm trying to say here. When you're getting that awful feeling of knowing you're in the danger zone and you would rather do anything in the world than stop out and eat that loss, you have to stop out and eat that loss. It's just that simple. I know it's not fun and nobody wants to hear that, but the fact that nobody wants to hear that is the reason that everyone is failing. And, once you're seasoned and you're trading with, I'm going to call it expendable capital, as in, like, if you blow a trade up, it's not the end of the world. You have more capital. Like, if you make a big mistake, it's like, all right, that really sucked, but I'm not dead. When you're farther down the road, there's other options of strategically fighting and swimming upstream in certain situations, but that's likely not you yet, right? So if you're just building capital for the first time, you have to follow the rules without deviation. You absolutely have to. So you have to get with that, or you're going to have to go find something else to do, and you're going to realize that trading is not for you. So that pretty much covers the micro side of the idea, like the intraday side of the idea. But there's also a macro element to the danger zone as well. There will be periods along your trading journey that last perhaps a few weeks to a few months even, where you just aren't going to be making money. And this is fine. It's not the first time it's going to happen to you, and it won't be the last either. You can't really control how much you make, right? There is one thing, however, that you can control, and that's how much you lose. Because that's really what trading is, right? It's a repetitious sequence of decision making based on past experiences, probability, and pattern recognition, right? Trying to put yourself in a high probability situation to succeed in the trade. That's what we're doing day in and day out. But you can't control how much you make, right? You can't force the market to pay you. You can, however, force the market to stop taking your money by stopping out. And the most crucial aspect of these slow periods in your journey, when you're in the danger zone, for a prolonged period of time and you're just a little frustrated, this is when you really need to effectively be controlling the drawdowns. Everyone goes through these periods, right? Trading is a streaky game. So the danger zone aspect enters the scenario here by way of frustration. We get impatient and annoyed that we're not making money. So we start to go hunting even harder for ideas, right? If our ideal setup isn't there or isn't currently working, we go try and find something else, something usually that we're less familiar with. And it usually ends up getting us into trouble. We lower our standards and trade ideas. We settle for subpar entries simply for the sake of being involved, thinking maybe this will be the one that gets the ball rolling again. And although this may feel proactive to you and like you're taking action to get yourself out of your slump, you really are, ironically enough, doing the exact opposite. You're compounding the problem. They always say, long-term investors, Warren Buffett, say compound interest time is your greatest asset. Well, it's also your greatest problem when you're here in the danger zone, is compounding the issues. And that's what you're doing by leaving what you know in an effort to try and do something else. So you got to fight that. And there's a slew of other issues that come with the danger zone here as well. We start to doubt ourselves. We look for trades, and we look at ideas, and we say, well, I can't do anything right. Maybe I should do the opposite of what I think. And then you go even further when you get deeper in the hole and say, well, maybe I should do the opposite of what I think. And it gets crazy. And I know that you laugh about that, but you'd really be surprised just how bad that people can twist themselves into knots here and have conversations with the trading devil in their head. And it happens way more than you think. I've had some pretty wild discussions with struggling traders, and you won't believe some of the stuff that comes out of their mouths. It's pretty nuts. And I can attest to it myself. Some of the things I think in my head, I'm like, what are you doing, man? So it's very real, and it happens. And, all these negative thoughts just culminate into exacerbating the danger zone effect. And herein lies the problem that every trader runs into, right? Once the self-doubt creeps in and the losses begin to mount, it just becomes a very slippery slope. And we work extremely hard to take the stairs up and grind out green days, and we're doing well. And then just one day you walk in and sit down, and bam, before you even know what happened, you've taken the elevator all the way back down to square one. And it sucks. We've all done it, and it needs to stop, right? So what do you do about it? The $1 million question. Unfortunately, there is no easy fix here. However, if you are struggling, I can almost guarantee that this is why. You're probably trying to force things to happen when that is just not a viable option in this game. So after a loss, or when you're feeling extremely frustrated, you have to be able to internalize that a little bit and stay strong mentally, and say, okay, I've hit a roadblock here, relax. Let's take a step back and look under the hood. You need to focus on why it's happening, not how you're going to be able to find a trade to fix it, because all that's doing is, you can't sweep the root cause of your issues under the rug, or they're just going to come up and they're going to happen over and over and over again. Even if you kick the can down the road and you do well again for another month or two or however long, if you didn't address the problem to begin with, it's going to happen again. It's inevitable, right? It's going to happen. Trust me. So you have to focus on why this happened. And a lot of traders don't want to do that, right? They don't want to, whether it just be laziness or ignorance or who knows what. Nobody wants to do that. They don't ever think that they're the problem. A lot of people, they just think, oh, I need to study harder. Oh, I need to look at more charts. I need more information. I need more skills. But a lot of times the problem is right in the mirror. It really is. So that needs to happen. Focus on the why, not the how you're going to fix it, the why it went wrong. That's really important. One way you can do this is write down what went wrong. Start a can't do list. Everyone wants a what to do. Well, start by writing down every time you make a problem or create a problem and do something really stupid, write it down. Be like, all right, can't do that. Or something bad's going to happen, right? So everybody wants to know what to do. But by compiling this list of things that you can't do, you're really, in essence, creating the list that you want, right? Checking off one bad habit at a time. Trading is just a process of trial and error experimentation and elimination of flaws along the way. Everyone thinks that they can just sign up for, a chat room and be told what to do, and that's going to be their golden ticket. It's very not the case, and no two people go about doing this in the same way. So if anyone tells you that they have all the answers to your problems, I can assure you that they do not. Really, what it comes down to is that trading is not a team game. It's a you versus yourself game. And you'll only succeed if you learn how to beat yourself, the flawed version of you. And that really needs to be priority number one. Getting angry and showing up the next day, doing no due diligence on the problem and why it's happening. Hoping today's the day that you hit the big trade that's going to fix all the damage you've done. That really needs to go completely out the window. It's just never going to work. And if you've been in that mode for a while now, then you already know the truth to that. All right, I'm not going to rant about this today. I think you get the point. And the take-home message is this. If things aren't going the way you want them to, you have to do something different. This is not Groundhog Day. Stop waking up and repeating the same day over and over again, which is essentially what most traders do until they run out of money. That's the sad story. You have to think outside the box. Trading more will not fix your trading problems. Does that sink in? Think about that. Trading more will not fix your trading problems. It's likely a you problem, and you have to start there. So if you don't do anything else to fix your problems, do some self-reflection and work on yourself before you dive headfirst and bury yourself in more charts. Charts are important. They're very important. But you are far more important. All right? The greatest trading strategies and systems in the world are all completely useless if the operator is flawed. If you are flawed, nothing is ever going to work. Even if you're doing well for a period of time, like I said, if you don't address your own personal issues, all you're doing is kicking the can down the road, and you're eventually going to implode if you don't address the root cause. So start with you. Just think about that, and maybe it'll work. Let me know. All right, guys. I'll talk to you soon.